Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Investing in Government Bonds, a 2024 guide. Are you looking for a safe way to invest your money? Government bonds might be just the answer. They're often seen as stable investments, especially when stock markets are unpredictable. In this video, we'll break down what government bonds are, why they're considered secure, and how they can fit into a diversified portfolio. Investing in government bonds means you're lending money to the government for a set period. In return, you get regular interest payments and your initial investment back at the end. This makes them a solid choice for conservative investors or those nearing retirement. We'll cover the basics you need to know and help you decide if they're right for you. So, let's get started. Understanding government bonds. Government bonds are a cornerstone of safe investing. They offer stability and predictability, which is often what investors want, especially in volatile times. Let's explore government bonds in greater detail. Definition and basic concept. Government bonds are debt securities issued by a government to support government spending and obligations. When you buy a government bond, you're essentially lending money to the government. In return, the government agrees to pay you back the principal amount on a specific date, along with periodic interest payments. These bonds are often considered low risk because they are backed by the government's credit. How government bonds work. Government bonds operate in a straightforward manner. Here's how they typically work. Issuance. The government decides how much money it needs to borrow and issues bonds to cover this amount. Purchase. Investors buy these bonds, providing the government with the needed capital. Interest payments. Over the life of the bond, the government pays interest to bondholders. These payments are usually made semi-annually. Maturity. At the end of the bond's term, or its maturity date, the government pays back the principal amount to investors. Think of it like lending a friend money, and they promise to pay you back with a little extra for your trouble. Only in this case, your friend is the government, and the little extra is the interest. Types of government bonds. Government bonds come in various types, each serving a different purpose and investment goal. Here are the most common types. Treasury bonds, T-bonds. These are long-term investments with maturity periods ranging from 10 to 30 years. They offer a fixed interest rate, providing a stable income over a long period. T-bonds are backed by the full faith and credit of the U.S. government, making them one of the safest investments. Municipal bonds, munis, issued by state and local governments. These bonds are often used to fund public projects like schools, highways, and parks. One of the key features of municipal bonds is that the interest earned is usually exempt from federal income tax and sometimes state and local taxes as well. Savings bonds. These are low-risk bonds aimed at smaller investors. The well-known Series EE and Series 1 bonds fall into this category. Savings bonds can be purchased for as little as $25 and have various features, such as inflation protection in the case of Series 1 bonds. By understanding the different types of government bonds, you can better choose the one that fits your investment strategy and financial goals. Whether you're planning for retirement, saving for a big purchase, or simply looking to diversify your portfolio, government bonds offer a secure and reliable option. Advantages of investing in government bonds. Investing in government bonds offers many benefits that can make them an appealing choice for a variety of investors. Let's explore some of the key advantages. Safety and stability. Government bonds are widely known for their safety and stability. When you invest in these bonds, you're loaning money to the government, which makes them a low-risk investment. Low risk. Unlike stocks, which can be volatile, government bonds are considered one of the safest investment options. The government guarantees the repayment of the principal amount, so your initial investment is well protected. Stable returns. Government bonds offer a fixed rate of return. This provides a reliable source of income, especially during times of market uncertainty. For conservative investors or those nearing retirement, this level of security can be a huge advantage. Think of it as having a financial umbrella during unpredictable weather. Predictable income. Government bonds provide a predictable and steady stream of income, which makes budgeting and financial planning much easier. Regular interest payments. Most government bonds pay interest semi-annually. These predictable interest payments can help you manage your finances better, knowing you'll receive a certain amount of money at regular intervals. Fixed interest rates. The interest rates are usually fixed, meaning you'll know exactly how much you're going to earn from your investment. This can be particularly beneficial if you rely on your investments for a portion of your monthly income. Imagine having a reliable paycheck that you can count on, regardless of market conditions. That's the kind of stability government bonds can offer. Tax benefits. Investing in government bonds can also come with unique tax benefits, which makes them even more attractive. Tax-exempt interest. Some government bonds, especially municipal bonds, offer tax-exempt interest. This means you don't have to pay federal income tax on the interest earned. In some cases, state and local taxes are also exempt. Potential tax deductions. You might also be eligible for certain tax deductions based on your investment in government bonds. Always consult a tax advisor to understand how these tax benefits apply to your specific situation. Being able to keep more of the money you earn is always a good thing. Government bonds can provide a way to reduce your tax burden while still securing a stable investment. These advantages make government bonds a compelling option for anyone looking to invest their money wisely and securely. Keep these benefits in mind as you explore your investment options. Risks associated with government bonds. Investing in government bonds can feel like a safe bet, but it's essential to recognize that they aren't entirely risk-free. Let's break down some key risks you should be aware of. Interest rate risk. Interest rate risk arises when the value of your bond investment fluctuates due to changes in interest rates. Here's what you need to know. Rising rates. If interest rates rise, the value of existing bonds typically falls. New bonds issued at higher rates offer better returns, making older bonds less attractive. Declining rates. Conversely, if interest rates decline, the value of existing bonds usually goes up. This is because older bonds offer higher returns compared to new bonds with lower rates. Think of it as buying a new phone. If a newer, flashier model comes out at a better price, your older phone's value drops. Similarly, changes in interest rates can affect the value of your bond investment. Inflation risk. Inflation risk is the danger that the returns on your bond won't keep up with inflation. Here's how it can impact your investment. Purchasing power. Inflation erodes the purchasing power of your interest payments and principal. If inflation rates are higher than the bond's interest rate, you could end up with less real value. Fixed returns. Most government bonds pay a fixed rate, which doesn't change with inflation. This means your returns may become less valuable in the face of rising prices. Imagine saving your allowance only to find out that the price of your favorite snack has doubled. Your saved money buys less, just as fixed bond returns might not stretch as far during high inflation periods. Credit risk. Credit risk involves the possibility that the government might default on its debt, though this is generally low for stable governments. Default risk. While rare, it's not impossible. Economic problems or political instability can sometimes lead to a government being unable to fulfill its financial obligations. Sovereign debt crisis. Instances like the Greek debt crisis show that even governments can face significant financial difficulties. These events can have a severe impact on bondholders. Think of it as lending money to a friend who's usually reliable but might hit a rough patch. While it's unlikely they'd fail to repay you, the possibility still exists and could affect your financial plans. Understanding these risks helps you make informed decisions when investing in government bonds. While they offer many benefits, it's crucial to consider these factors to manage your investment wisely. How to invest in government bonds. Investing in government bonds can be a smart move if you seek stability and steady income. There are several ways to invest in these bonds, depending on your comfort level and investment goals. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.